Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Data would tell me how much my option would decay. So if I had an option that was worth $3.50, but it was costing me 20 cents a day, well then, if the underlying exchange rate didn't move, the new option value would theoretically open at $3.30. Vega is going to tell me, and this is really important right now. Why? Well, Vega is always important, but even more so now because volatility is so high. So we're worried about sometime, we just don't know when, the markets will calm down a bit and volatility will go down. Now, the term Vega is going to measure how much I can make or lose if volatility changes. So if I had an option that had 25-cent Vega and a theoretical value of 250, well, this new option and volatility, let's say, would move up a whole point, well, the option would be worth 275. We've seen volatilities explode recently. How long will that continue? That's anybody's guess. Not sure on that one. But you want to know that this Vega is very, very important. And one way to mitigate the Vega risk is by trading spreads. And Rho measures interest rates, one country versus another. So if I had a row of 0.06 and we had a 1% change in interest rates, well, that would significantly change my options by about 0.06 if the row was 6 cents. In fact, there are rumors or there are some talk that the U.S. is going to cut rates as early as tomorrow again. We'll see how that all plays out. So lastly, volatility of an asset. Let's just look at, whatever, the U.S. dollar against the Canadian dollar. It could be, I don't know what it is, 24%, let's say. So, or no, I don't think it's that high. Maybe it's 20%. So 20%, what that's saying is that the U.S. dollar against the Canadian dollar should move 68% of the time up or down within a 20% range. So it's a very concise and powerful way of conveying the amount of uncertainty. Just to give you a benchmark or a metric of what, or a way to look at this in terms of context, the U.S. dollar Canadian dollar was trading at about an 8 or a 9 volatility a year ago, maybe a little more than a year ago, actually a little less. Last January, February traded at 8-9%, now trading around 20%. So this Vega is the option sensitivity to volatility changes. And as I said, a 1 unit change is going to tell me how much I could make or lose. So we have the types of volatility. We have historical, which means how much has the option changed in the past. I'm sorry, how much has the underlying exchange rate changed in the past? And we can measure that. The implied is going to tell me from the options market itself, what is the market expecting? So when you look in, somebody says, what's the implied vol, or what's the IV, they call it. They have these fancy acronyms, IV. It just means the implied volatility, nothing more than that. That just means what is the market expecting. So what does that really mean? Well, you take a look at the price from, let's say, the ISE, and you could reverse engineer and come up with a volatility that would make that price fair. What's important is to come up with your own forecast. So how are you going to come up with your own forecast? Well, Jason's going to help you look at the exchange rate, the trends that are going, what's going on there. In fact, he does this each and every week. So I'd urge you to sign up for the FX Options Weekly Outlook. And then you could sort of understand that and understand volatility and find some option strategies that make sense to you. So historic volatility, you could use any period of time from all the way from 10-day all the way through to many, many days. Implied volatility is just the reverse engineering of the options market itself. So that's just a quick review, and there's a lot more on the ISE. If you want to go to www.ise.com/archives or /podcast, you can learn more about what I just went through, because I'll spend a lot more time on that. But we thought, Jason and I thought, it'd be neat if I give you just a quick refresher on what all that technical stuff means, because this is all nice, but how you select your trades based on the trends, if you will, is very, very important. Of course, not to say that the option, the understanding of the option pricing isn't important. You need to understand both. So hopefully, Jason's going to show you how he looks at the prices of the pairs and what that means to him when he's selecting option strategy. Jace, how about if you take everybody to your desktop and show them what you do each and every week?
All right, sounds good. So you're passing over to me. I'm going to share my slides. Is this what we're?
Absolutely.
Okay, good stuff.
I will turn that to you, and then you. Let's see.
All right. Okay, so.
Good to go, Jason.
Okay, so I guess I want to make sure, Steve, what are you seeing on your screen right now?
I'm seeing my slides. Have not seen a change.
Okay, so just let me go in here, and I need to share my. All right, let's see, share an application here. Can I get in and do that? Okay, no. That's what I need to do. Here we go. All right. So we should be now looking at a weekly U.S. dollar index chart. Is that what everybody's seeing right now? You seeing that, Steve? Okay, good stuff.
Great. This is great stuff.
Good stuff. All right, so folks, again, a pleasure to be here this evening, and thanks, Steve, for the opportunity to be able to sit in and help out with tonight's session. Now, Steve was talking about the different variables that influence how an option will trade, and of course that carries through all the way through your FX options right into your equity options. And the one sort of common theme is, of course, that when a significant move is expected, the options prices will reflect that expectation in the form of their IV or their implied volatility. So what we do with respect to, I guess we'll start out with our weekly outlook, is we look at our major pair values and we forecast the probability of where our pair values are going to trade. And as of late, of course, it doesn't take a rocket scientist to figure out that the U.S. dollar against most major currencies has been moving quite rapidly to the upside, and that is again why our option premiums have increased so significantly with respect to their volatility. So the higher or the more anticipation there is with respect to the underlying, the more expensive the option premiums are going to become. Now, to bring it back from a technical perspective, the way we start our weekly outlooks is by looking at the U.S. dollar index. So right here, as you guys can see, we have a snapshot of the weekly U.S. dollar index. And I have to apologize, that is a monthly snapshot of the U.S. dollar index. So each one of these bars represents 1 month's worth of time on of your U.S. dollar. And what I want to illustrate is just where we've been, and this is looking back to I guess it's 1986 to where we are now, and how, although it seems like we've made a very, very significant move with respect to the U.S. dollar value over the shorter time frame, we have to look at just what's been happening with respect to it over the bigger picture. So one of the interesting things that we've come up with from a technical perspective is that the U.S. dollar seems to be sort of following a little bit of a channeling pattern. Now, again, this is big picture, so you have to keep in mind we're trying to create a little bit of a broader view of the index. So with that being considered, you'll notice that back in '86 we were trading up in here. Now this line that runs all the way across the top here, okay, is a parallel line to what you're seeing at the bottom. So all I simply have done is taken this line here, copied, and moved it down to here, and you could see that we've essentially now established a big picture, what we would refer to as a support and resistance level.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.